So you've got a business, but what about a brand? The difference? More of you. Wix gives you the freedom to create your website, own your brand, and do it on your own, exactly how you envisioned it. Experience limitless customization. Boost your creativity and efficiency with AI tools for every part of your business journey. Scale up with built-in SEO, e-com, and scheduling features. Put more of you in your business. Go to Wix.com and do it all yourself.
Hello and welcome to the Becker Private Equity and Business Podcast. My name is Chanel Bunger, and today I'm excited to speak with Matt Wolf of RSM, who joins us weekly to share insights into economic trends he's keeping an eye on. Matt, thank you as always for joining me. Why don't you take it away and tell us about some of the things that you're seeing out there?
Yeah, thanks, Chanel. So, we're watching capital market flows, of course, and in particular lately looking at the actual public equity markets and what it might mean for IPO opportunities. As we look at the S&P 500 as of this recording, we're back down to 55.45 or so, essentially erasing the gains that public equity markets have made since the Fed began cutting rates back in September. Sort of a coincidence, I guess, but yeah, markets are back down, and there's a bunch of factors for this, and it's very important as companies look to raise, potential IPOs, right? A lot of sponsors, a lot of companies have been looking to 2025 to be the year that the IPO window would reopen and there'd be another way to access capital. But falling indices are not a good sign, and they're coming down for, like I said, multiple factors. So really, maybe in no particular order, 2024, we saw a lot of solid growth given kind of a weak comparison to 2023, right? So we saw gains in 2024 given the weak or typical easy comp of comparing growth 24 over 23. Well, now, showing growth over 24 is a much higher hurdle. So there are some fundamental sort of growth issues with a lot of companies not meeting targets or revising targets, and that's brought equity prices down, certainly. Another one would be the uncertainty around tariffs and which tariffs will go into effect at what magnitudes when. Nobody really knows. There doesn't seem to be sort of a cohesive strategy or roadmap to answer really any of those questions, and we're seeing retaliatory tariffs across the globe on these, and that's creating a huge downward pressure on equity values and in equity markets, which will delay, deter, defer, cancel IPOs. Certainly, IPOs generally need a robust equity market. The individual companies looking to go public will need obviously strong, sustainable growth stories to sell investors, but they also sort of need the tailwind of strong equity markets, strong equity valuations, and they're just not there. So we expect that companies will continue to look to private capital, private equity, private credit as they look to expand and navigate these challenges. But at least so far, where we sit as of this recording, equity markets are down back to September, August of 24 lows, and that does not bode well for companies and investors that are looking to tap an initial public offering in 2025.
Perfect. Well, Matt, I want to thank you for always keeping us in the loop with everything and for joining me once again on the Becker Private Equity and Business Podcast. Thank you so much.
Thank you, Chanel.